What's up guys, in today's video I want to show you the raw truth to trading psychology in the market. I want to teach you on how to master your trading psychology in such a way that making profit from the market is gonna be a very easy work for you guys. So let's get into the video. Let's not waste much of our time. So I'll be telling you 4 raw truths about your trading psychology, and the first one out of the 4 is your entries and your exit. These are key places whereby you shouldn't take for granted or you shouldn't play with whenever you want to take any setup in the market. Your entries matters a lot while your exit matters a lot also, because sometimes you end up getting the best entries and you end up not even taking a little profit or a single profit from the market due to the fact that your exit plan is very wrong. So whenever you want to go into any trade, just let the way you focus on the entry part, that's the same way you focus on your exit plan also, because these two plans work together. You can see opportunities in the market, and because you don't have a good entry plan, you just be waiting for the market to get to other places whereby the market is not going to ever get to. Then from there the market keeps dropping or keep going to the upside because your entry plan was very wrong. Maybe the market will even hit your exit plan, and from there you'll be like, if I knew I could have taken this trade, if I knew I could have did this, that, blah blah. But that's not the major target for this year. I want you to do the right things this year so we can see good results from the market. So this is our entry plans is going to be like this year. So if our plans is that the market should get to, let's say, our support zone, and we have analyzed the market already, what we're going to do is, if the market eventually gets to that point, then we are going to enter that trade. Except the market breaks that point and makes us know that this market is not going to go up at that point, or it's not going to go below at that point, then we know that the market is not going to go at that point. But if the market gets to that place and still doesn't break that zone or that area in the market, we're going to get our entry around that place. It's just like something that we've planned already. We don't need to go against our plan. We have to flow up with our own plan. The only thing we're going to do is, once we enter that place that we also set up for our stop loss, we're going to put our stop loss around that place. Our entry is perfect already. And coming to that exit part, whereby we're going to exit the trade, just like the way we have take profit in the market, we will place our take profit at that place. And at this point, we're not going to close any trade in the market. We're not going to do anything. Let the market do its things for us. The take profit is there for us already. Except the market is very close to the take profit already. Let's say we have like one more candle for the market to just hit the take profit, then we just give that one to the broker. Then take our money from the market, bro. That's a very simple way to make our exit in the market. And also we have to make sure that our take profit are always there, so that in case we're not in the market at that point, the market will still eat our take profit for us. Because the two things in the market that matters is your stop loss and your take profit, not your emotions. Your emotions doesn't matter in the market at all. That's why a lot of people are emotional and they are not making anything from the market. So you have to die that emotional part of you and go into that stage whereby you don't get emotional due to what you're seeing. You are following your strategy, you are following your setup, and that is all. That is the truth about the market right now. So let's get to the second point, whereby I'll be showing you more things about this chart, which is your lot size. Yeah, this one plays a very big role in your trading. It plays a very serious role, because most people go into trading because they feel like if they use big lot size in the market, they will bag a lot of money from the market. They forget that this is a business and it should be treated like a business. That's why you see someone using an account of $20 and the person is trying to use one lot size, bro. Are you crazy to that extent? They just see someone using that kind of one lot size and they want to replicate the result on their own account also, not knowing that you cannot use that same lot size on your own account. You have to learn on how to use the right lot size on your own trading account, because if you're using an account of $20, $30, you should be using the lowest lot size, or maybe just increase it a little bit, but not for you to be using one lot size on your $20 account, $30 account. If the broker promises you're going to make a whole lot of losses. So whenever you want to take any trade in the market, make sure you check out your lot size very well. Make sure your lot size is suitable to your account size, and make sure that if you are taking that trade, the positions you are taking also suit your account size. Because sometimes we end up using the lowest lot size and we end up placing multiple positions in the market that will still result to us using a very big lot size. So you have to check out those positions that are placed in the market, and also make sure that if you calculate the position together using your lot size, it's still gonna be a little lot size on that small account that you're trading. Except you want to just flip the account aggressively, then you can just go into the market and place as many positions as you want in the market. That's another key raw truth in trading psychology that you need to know in order to apply this also in the market and see reasonable results from the market. So let's get into the third part, which is our risk to reward ratio. Very important also in the market. Look at this right now. For instance, if I'm entering a trade and my risk is $5 and my reward is still $5, That's a very wrong pattern of trading the market, because you risking $5 to make $5 again is just like a one risk to reward ratio, and by doing this you're not gonna grow big to that level that you want to see yourself. So we have to increase our risk to reward ratio due to the setup that we're seeing in the market. If at all we are risking the market right now, this is what we're gonna do. We're gonna risk 1% of our account, that's at least out of $20, we're gonna risk like $4-5, and what we're expecting on that $4-5 that we're risking is about $20 to $30. Why are we doing this? Because we're trying to make sure we triple that money that we're trying to risk using that good setup that we know already in the market. That's why we don't need to take every setup in the market. We have to look out for those setups that we are very sure of, and we know that this one is going to favor us. So by doing this now, our risk to reward ratio is going to be very good. And also, even though you're using a big account size, you have to also make sure that your risk to reward ratio is very good. I know you can use a big lot size on the big account size and make more money in the market faster than all that are trading the small account for now, but still yet you have to make sure that your risk to reward ratio is also good even on your big account, because what matters is what you get at the end of the day, not how much you risk in the market. Very important. Take note of this also. And the last part is your plan management. This is where everything comes together, because at this point you have a good risk to reward ratio already, you have a good lot size already, and you have a good entry and exit in the market already. So the plan is, how much are you going to risk per every day that you want to come to the market and trade? Very important. If you don't have plans of what you want to lose in the market, then you're not even ready to trade at all, because trading is a risky business and you have to risk in order to get anything in return. If you don't risk anything, your money is going to be dominant in that account, your money is going to be stagnant, and nothing is going to enter that account. So that's how we have some people in the market that comes to the market every day and they deposit like $100, $200, $1K every day in order to trade the market with it every day. So whatever happens to the money that day, they are ready to either lose it or make more of it on that same day. It's not that they don't know that if they leave that money in that account, they're going to make more money, but this is just their own plan management. There are people that come to the market every day and the daily risk on that day is $50 in the market. So if they lose that $50, they'll go and rest that day. The next day they come to the chart again and they try again to see if they're going to make more money from the market. That's their own plan on the asset that they trade, and that is how they want to trade their own. But when it comes to me, I will just tell you that have specific amount of money that you're ready to risk every day. If I'm ready to risk $10, $20, $500, $200, let it be that money. Let the market not take more than that from me. It's better I don't even risk everything that day than risking more than that amount that I've set in the market. Because one thing happens to you, due to the fact that trading is a psychological business, once you start losing more than your daily loss targets, it will start affecting you psychologically, and from there you won't be able to think faster in terms of you taking other good opportunities in the market. You just be so confused that if you want to take trade, you start thinking about the money you have been losing, and from there you will lose your focus in the market. So you have to make sure that your plan management is very strong in the market, so that everything you're going to do in that market will flow well for you. So that's all you need to know on how to fix your trading psychology and also make the best of it in this year. If you're new to the channel, don't forget to hit the subscribe button, and don't forget to like this video and drop in the comment section whatever you want me to teach you in the next video, so I can just look into the comment section and know what to tell you again in the next video, guys. Peace and love. See you in the next video.